Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, November the 6th, the year's 2023. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, we had quite the day on Friday, over 200 pip range on the pound. But you know, the funny thing is, using, simple methods just, seem to work.
They do. That's it. That whole idea of KISS, keep it simple, stupid. It does seem to work, and and it doesn't work every time. No, nothing works every time. That's just the way of life. I mean, the reality is you just don't know what's going to happen. You don't know what's going to come across your path. And so what do? You just go and keep things simple, manage your money, manage your risk, and at the end of the day, you'll be okay. You'll have winning days, you'll have losing days, and hopefully you got more winning than losing, and it's just that easy, It's actually not easy, but it's easy to say, but that's what we have to go and do, and it's sort of like even on Friday. I don't know if you recall or not, but when we were trading on Friday, I just didn't I didn't want to trade the NFP, mainly because the numbers that came out were just, I'm not a fundamental trader or anything, but the numbers that came out just didn't make sense. They were kind of screwy. The pundits all over TV were saying these were somehow good numbers, and they really weren't. They were actually pretty bad numbers. And yet at the same time, all these people were coming out saying it, and sort of like, when they're pumping like that, there's something else going on in the market. I'm better off not to be there. I had already made my core for the day. I only made core that day, and that's okay. You have days that are like that. In fact, I think I underperformed on that day. I didn't even quite make core. I think I made like 3/4 of core or something like that. I can go back and look, but the reality is that you're going to have days like that, and that's my way of trading. I'm not going to get. I'm conservative enough with my trading to not try to step in front of the freight train. I'd rather, and the problem with trading something that you don't understand or don't understand what's going on is that, you're setting yourself up for a disaster. Yes, we don't know what's going to happen every time we pull the trigger, but at the same time, we do have based on statistics, based on what we've seen happen in the past, based on our methodology, whatever our methodology is, based on whatever our money management is, our risk management, we can keep things, like I say all the time, keep things between the banks and the river, but at the same time, when I see the market doing crazy stuff, and if you recall, TRL, I was saying to you, look, my spread is crazy. Your spread was actually, maybe a little bit elevated, but basically what it should have been. And with my broker, for whatever reason, I was just getting horrible spread. I mean, we're talking about, normally my spread is somewhere between 0.2 and 0.5, 0.7, and then I pay a 3-point commission on top of that. But I was seeing spreads of, 5, 6, 7, 9 pips, not points, but pips, and then it would drop down to 0.2 or 2 points. And it would just flat back and forth like that. It's like, I can go in here, take a trade, get to where my TP is, but because of spread, I can't get out. It's like, I'm not gonna trade that. So my method of trading on days like that is don't trade. I'm just, there's no reason to. There'll be another day that comes back and it'll be, relatively good. Today, I had a very good day. I made my core, and then I made another, I think 17 pips after that. So, I more than made up for what I didn't get on Friday, and I didn't put myself at risk. And I think my biggest takeaway from trading is just don't put yourself at risk. The reality is you sit in front of your terminal and you're watching price and you're watching it, and if you don't like what's going on, there's nobody with a gun against your head that says, take the trade. The only person that's going to take the trade is you. And if you don't feel comfortable about taking a trade for some reason, you just don't like the way things are moving, You know, my piece of advice, you know, you take it, throw it away, whatever you want to do with it. But my advice would be, don't take the trade. Why take a trade in that situation? Or if you're in a trade and the market starts acting absolutely nuts, starts doing crazy things, there's no news on the table, yet at the same time my spreads are growing. I get to my, you know, you like to call it an inflection point. Every time I get into a trade, excuse me, I'm down 3-4 pips, and then all of a sudden it comes right back up to where I ended, and you know I may be down like, you know, half a pip or 2 points or something like that, maybe even up a half a pip, but it just doesn't go and do what I want to do. You know what? As far as I'm concerned, you know, just scratch it. You know, something else will come along. Maybe not today, but eventually something else is going to come along. Why take the risk? Because you could sit there, you know, and next thing you know, it dumps on you. It could dump on you 20 pips or something. Now, of course, it could also go up for you for 20 pips. But the thing is, if you're not feeling comfortable, you're just not seeing the market do what you expect it to do, then what you're basically saying is the edge I thought I had, I don't have anymore. So why continue?
Exactly. Oh, and there was a trader that wanted you, I guess, to explain your trading template a little bit more.
Okay. Um, I'm not sure. Oh, do you know what I did when I covered it on Friday or Thursday? I guess it was. I explained all the indicators on the right hand side, but I didn't explain what was on the left hand side, where the actual candles are. What I have on there is just the state change bars. So I don't recall what all the colors are, to be honest with you. I know green means that it's a candle that's going up. I know that red is a candle that's gone down. I think a aqua candle or aqua bar on the candle is an inside bar, and then the maroon one, I'm not sure if that's, I believe that's an outside bar.
Yeah, you got it right.
Okay, good. I just, but I don't care really that much about what the colors are. All I care about is the fact that I went, for instance, candle 2 was red, and candle 1 is green. I've got a state change. That's all I'm looking for is a state change. I'm not looking for a particular, you know, a particular type of state change. Now, advantage is you could probably dial things in a little bit better than I had it dialed in, you know, just by looking at particular state changes. But if you look like right now, I had a state change. I went from red to green, you know, flip-flop box. That generally that's going to happen on a bug indicator too. And that's what those diamonds are on the chart. They may look like dots on your chart if it's compressed, if your video is compressed, but those diamonds are just indicator 2, where indicator 2 on previous candle is where indicator 2 went and closed for that particular candle. And then on the current candle, it's just where indicator 2 is at this moment in time. And that's based on an EMA 5 and on the 1 minute chart. I'm not sure, I didn't send you a 5-minute chart of it, but the 5-minute chart would have been the same thing, except for it would have been an EMA 5 on a 5-minute chart. And the only reason I had that on there is because I like to be above the EMA when I take a trade. It's not necessary. It's not, you know, it's not a do or die thing, but I like to, if I'm going to look for a long, I like to go and be above the EMA 5 or at least going towards the EMA 5. I don't want to see my EMA 5 getting stretched in the other direction and then going long on it. It just doesn't seem very wise to me, you know, because the EMA, you know, it's like, you know, it is a squiggly line, so don't kill me for this, but I just look at it from the perspective, it's just a very, very short-term bias at this moment in time. It's just telling me what's going on at this very moment in time. I know, Tiro, you like to use it on the M30 because it's like 17 or 18 pips away from the EMA. Generally speaking, that's when price likes to collapse back towards the EMA. And what happens there is price moves towards it, and the EMA also comes up to meet it as well. So somewhere in the middle, it likes to go and meet, you know, and it just gives you, for you, that's a nice little, you know, bias that you can use if you're looking for a reversal trade. Hey, this thing is, as a market experts call it, this particular time the market's overheated, in a particular direction, and it gives you an indication, how overheated a market is. You're sitting there with 18 to 20 pips. I mean, on Friday, I think at one point we were like 75 or maybe even 80 pips away from the M30 EMA, which is just absolutely incredibly overheated. You would think they would have to come back, and it came back a little bit. It didn't come back exactly as much as you would think it would come back, but it's just an indication that, hey, the market's overextending in a particular direction. But at the same time, sometimes we have market corrections, and that's what I think was going on. The market got, all the way down. Last week got all the way down to what, somewhere around 75 or 78. Actually said correctly, the 2075, 2078, because we're so far away now. And now we're sitting up here at 2387 or so, 2390. And sometimes we have a market correction. And so sometimes even something like, the market, quote unquote, is overheated. Well, maybe it's not overheated, it's just that we're in the middle of a correction, and it's just going to, now, did that EMA come back to the M30? Yep, it certainly did. Right now, we're only like 4 pips away from the M30. So that 75, 80 pips, it was corrected. The thing was that the EMA got corrected, not the price in this particular case. Generally speaking, more times than not, the two of them meet somewhere in the middle. This time it didn't. Prices continued skyrocketing up, and for whatever reason they did that. Based, I guess it's got everything to do with that jobs report. The pundits on TV, they're all going to saying how great these numbers are, but at the same time, the market's saying, hey, these numbers aren't so great. I don't know what you're thinking, but these numbers are not so great. And the reason why I say the numbers weren't great was because, generally speaking, what the number that's always been used out there is you need to have 350,000 new jobs created every month in the U.S. for the economy to be slightly growing. When I say slightly growing, expected GDP somewhere around 2 to 3%. Okay, we had 129, I think it was something like that, 125, if my memory serves me right. So we had a third of what would be expected for a growing economy. Yet, all these pundits on TV were saying, look at this, we put 129,000 new jobs out in the market. Yeah, that's great, but it doesn't account for the number of people that, come out of the job market, because that's what that's where that number 350 comes from. Because when you look at the number of people who retire out of the job market, the number of people who get laid off because of whatever reason, because remember, that jobs number doesn't include people going on unemployment. Okay, this is just the number of new jobs, and so it's not accounting for any of that. And so that's the situation where that number is not so great when you really get down to it. And so what happens is the bankers, they get pretty nervous. The institutional traders, they get pretty nervous. They know that those numbers, no matter what these guys are saying, these numbers are not so great. So why are they saying the numbers are so great? Because, it's a situation where politicians have got to say they're great. Why? Because if they don't, they wind up losing, the population out there. So that's my 2 cents on fundamental trading.
And you know something? The fastest 15 minutes in trading is almost over. And just a couple other things, people might be wondering about this green background. That's the M30 candle color, right? That's what you said?
Yes.
Set up? Yeah.
Yep, exactly.
Yeah.
And then the crimson would be a red, would be a down candle, and the green would be an up candle.
Yeah, and then one thing, if you're wanting to play that indicator 2 trade, one thing I noticed, if you've got an M30 that closed and in the distance between the close and the EMA is 18 or above, don't reverse on the next M30, or be real cautious if you do, because then it'll usually go, and then it would be when that big M30 is candle 2, that's the reversal. But fellow traders, always remember and never forget, It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumple one, over and